in association with American Airlines, with more flights to more American cities than anyone.
You're watching Market Wrap at half past the hour. Welcome to our international viewers, by the way, who join us each day at this time. I'm Bill Griffith. My partner Neil Cavuto has the day off, day before expiration day in the United States. And we had a market that was generally lower earlier in the session, but we saw some buying come in late this afternoon, and it pushed some indices back into all-time high territory. Here's what I'm talking about. The Dow Jones Industrial Average finishing the day up a quarter point. That is not an all-time high there at 34.55. But some of the other indices were in all-time high territory. We'll get to that in a moment. Among the Dow components that were positive today, GE was up 1.5, International Paper up 1 1/8, DuPont and AT&T gained $1 apiece, and Allied Signal was up 7/8 at 68 5/8. The average share of common stock, though this may be a better indication of how the market actually did today, was down 5 cents. Although the transportation average went back into all-time high territory, up another 12.25 points today. And the same thing for the Dow Utilities average, up 1.5 to a new high at 247 1/2. Broader market averages were lower, though. The Standard & Poor's 500 index down a quarter point. The American Exchange average down 1.10, and the Nasdaq Composite was down 3.60 at 670.34. All this on volume of about 259 million shares on the New York Stock Exchange. A late bond rally as well may have helped some of those stock prices. It finished up 15/32 at 105 5/32, bringing the yield down to 6.72%. Down to Wall Street, our market analyst Roy Blumberg joining us from the American Stock Exchange. Roy?
Well, Bill, indeed, that bond market rally at the end of the day did help stocks come back. And we didn't get all of them back, as you can see by that average price of a share of common stock. But we did have a good comeback. Let's take a look at our technical indicators. First breath, we had 926 stocks up, 991 down. That breath is just a little bit worse than the Dow down half a point, but it improved significantly at the end of the day. We still have to call it a modest negative. As for the volume, 260 million shares, relatively good volume today. We've seen the volume work its way back, but we are still below our all-time high, so it's something that has to be watched. As for the advanced decline line, we're also watching it. A new high in the Dow confirmed by the advanced decline line would be bullish for the market. A new high in the Dow unconfirmed by the advanced decline line would be bearish. It's a close call at this point. We have to see what will happen, so we're watching this one. As for new highs and new lows, 136 new highs today, 37 new lows. The new highs have backed off quite a bit here in the last couple of days after having a very strong number. Again, the key here is 337. That's the peak number of new highs we've seen. The last time the Dow made a new high, we did not have that many new highs, which is why this indicator is negative. There's a chance it could turn positive again, but probably not. As for the ARMS index, 10-day moving average of ARMS at 1.24, again at intermediate-term oversold levels. The reason why we're seeing numbers like this without the market pulling back a lot is there's tremendous distribution continuing to go on in healthcare and consumer areas, lots of downside volume. So this positive reading probably is not as positive as it suggests, but still positive. As for the trend watch, long-term trend is up, intermediate-term trend remains up, and the short-term trend remains up. Well, Bill, the rally in the bond market helped what was only a meager decline. The market's a little tired, and we may still need a little bit more backing and filling. But I still look for a short-term move to a new high in the Dow. Back to you.
Thanks, Roy. We'll see you tomorrow. Roy Blumberg, our market analyst, joining us from Wall Street. It is money supply day in the U.S. Just a few moments ago, the Federal Reserve announcing the latest figures for money supply for the week ending April 5th. The most liquid of the three aggregates, M1, was up $5.6 billion in the week ending April 5th. You add a few more of the less liquid, and that gets you M2, the most widely followed of the three, up $4.6 billion. And the least liquid of the three, the broadest, M3, down $3 billion for the week ending April 5th. Other financial headlines in the U.S. this day, President Clinton saying that he is willing to scale down his $16 billion jobs package. In a ceremony at the White House this morning, Mr. Clinton said he was willing to compromise as long as the focus remains on jobs, growth, and the unmet national needs. But the president did not say how far he is willing to go to win Republican support for that jobs creation bill.